Friday was a strong day for Robinhood stock, with shares bouncing back sharply after 2 consecutive down sessions. The stock gained $3.36, reclaiming most of what was lost earlier in the week. While there wasn't a single breaking headline that lit the fuse, the rally was driven by a mix of improving sentiment in key areas for Robinhood's business, supportive macroeconomic factors, and ongoing confidence from Wall Street analysts. Let's unpack what happened, why it matters, and where things might go from here. To start with, Robinhood closed Friday at just over $114, a gain of about 3% for the session. This move came after 2 red days that had briefly taken some steam out of the stock's powerful rally. And make no mistake, this has been a huge year for Robinhood. Even with those recent dips, the stock is still up around 200% year-to-date and has firmly cemented itself as one of the standout performers in the financial sector for 2025. So what was behind Friday's bounce? The first piece of the puzzle lies in the crypto market. Cryptocurrencies have been trending higher again after a brief pullback earlier in the week. For Robinhood, crypto is not just a side business, it's a major revenue driver. The company's crypto trading volumes and related transaction revenue have been some of the fastest growing parts of its business, and when sentiment in the digital asset space improves, Robinhood stock often benefits in parallel. On Friday, with Bitcoin and Ethereum pushing higher and broader altcoin sentiment lifting, investors had a renewed reason to buy into Robinhood's growth story. The second driver was Analyst momentum. Even though there wasn't a new note published on Friday itself, the bullish outlook from major analysts like Piper Sandler has been reverberating through the market. Piper recently reaffirmed its overweight rating on Robinhood and set a price target of $110, which, at the time it was issued, already implied strong upside. With the stock now pushing beyond that level, it suggests the market is willing to believe in the company's fundamentals and long-term vision. Analyst support doesn't just affect short-term sentiment, it can help anchor institutional confidence and bring in more medium to long-term buyers. The third factor was macroeconomic in nature. U.S. consumer spending numbers came in strong, and job market data continued to show resilience. This kind of environment supports the retail investing space because it suggests everyday investors are not pulling back in the face of economic uncertainty. In other words, if consumers are feeling financially stable, they're more likely to keep trading, investing, and experimenting with products like Robinhood's tokenized stocks and crypto services. Strong macro data also generally lifts overall market sentiment, which can amplify moves in high-growth, high-beta names like Robinhood. Now, one important thing to understand about Friday's rally is that it wasn't the result of a single, earth-shattering development. Instead, it was more of a technical and sentiment-driven recovery. After 2 down days, there were likely traders looking to buy the dip and ride the next wave higher. When you combine that with improving crypto prices, ongoing analyst support, and macro tailwinds, you get the kind of steady buying pressure we saw throughout the day. If we zoom out, the stock's performance over the last month has been remarkable. In that time, Robinhood has not only surged past $100 billion in market capitalization, but it has also demonstrated resilience in the face of profit-taking and short-term volatility. The company's Q2 earnings beat was a major catalyst, showing earnings per share of 42 cents and revenue just shy of $1 billion, up 45% year-over-year. Crypto trading revenue surged 98%, and assets under custody climbed to $279 billion. These are the kind of growth numbers that get Wall Street's attention. Beyond the numbers, Robinhood's product pipeline remains a big part of the bullish thesis. The rollout of tokenized U.S. stock trading in Europe, the acquisition of Bitstamp, and the expansion of its crypto suite, including staking and perpetual futures, all point toward a company that is not content to simply be a U.S. brokerage. It's pushing hard into global markets and into the intersection of traditional finance and blockchain. That being said, it's important to keep a balanced view. While Friday's bounce is encouraging, Robinhood still faces hurdles that could create volatility ahead. Regulatory scrutiny on tokenized assets is a real concern, especially as the SEC and other global bodies begin to set clearer rules for how these products can be marketed and traded. Crypto revenues, while growing quickly, can be volatile. If the digital asset market sees a sharp downturn, it could weigh heavily on Robinhood's top line. And competition in the fintech and brokerage space remains fierce, with both legacy institutions and upstart platforms vying for the same customers. Still, the company's momentum is undeniable. In the short term, one thing to watch will be whether Robinhood can hold this level above $110 and potentially build a base for another leg higher. Technical traders will be eyeing recent highs as potential breakout points, and if crypto markets stay strong, we could see another push toward the $120 mark in the near future. Medium term, the focus will shift to execution on its ambitious expansion plans. The integration of Bitstamp could be transformative, giving Robinhood a deeper footprint in the global crypto exchange market. The success of tokenized stock trading in Europe could also set the stage for similar offerings in other regions, especially if regulatory frameworks evolve to accommodate them. Longer term, the possibility of Robinhood joining a major index like the S&P 500 could be a game changer. While there's no guarantee this will happen soon, crossing the $100 billion market cap threshold and delivering consistent profitability are steps in the right direction. Index inclusion would open the door to a wave of passive investment flows, potentially providing a durable floor under the stock price. In summary, Friday's rally in Robinhood shares was the result of a confluence of positive factors: an uptick in crypto markets, continued analyst confidence, supportive macro data, and technical buying after a short pullback. It's a reminder that while headline catalysts are important, market psychology and momentum can play an equally powerful role in driving stock prices day to day. For investors, the story remains a mix of high growth potential and meaningful risks. The bullish case rests on Robinhood's ability to expand globally, deepen its crypto and tokenization offerings, and keep growing its customer base. The cautious view focuses on regulatory headwinds, crypto volatility, and the challenge of sustaining current growth rates. As we move forward, the key will be monitoring those moving parts: how crypto performs, what kind of regulatory clarity emerges, how well Robinhood integrates Bitstamp, and whether it can maintain its impressive revenue and profit trajectory. If the company can navigate these challenges while continuing to innovate, the rally we've seen this year may still have room to run. For now, Friday's bounce is a positive sign that even after 2 down days, buyers are eager to step in. That kind of resilience is exactly what bulls want to see in a stock that has already delivered one of the market's most impressive performances in 2025. Whether you're a long-term investor or a short-term trader, Robinhood remains one of the most closely watched names in the market, and for good reason.